thank you everyone for joining this webinar with our topic, Bridging the Gulf, New Capital Raising Solutions from Raising Money in the Middle East. Very happy to have you all dialing in. It's great to see we have a very nice and high number of registration, which shows the level of interest in this topic. And again, thank you for making the time, knowing you all have very busy schedules. That's also one of the reasons why we decided just to keep it to 30 minutes, short and sweet. Feel free to share any questions that you have. If we don't manage to answer the questions that you have, don't worry, we will definitely individually follow up with you because we want to make sure that this webinar is worth your time. Now, before we kick off, I just want to share with everyone the agenda for this webinar, so you know a little bit what to expect in the next 30 minutes. Well, we're going to start obviously with an introduction of the panelists. I'll do that in a second. What we're going to discuss after that are the opportunities in the Middle East, and we'll have Lynda mainly talk about that with some support from Barry. And then we're also going to discuss why there's a big appetite for US fund managers, for money from the Middle East. And then I think what is definitely is going to be mainly with Barry is we're going to discuss some of the structural solutions that are available to facilitate capital to come into your fund or invest together with your funds. So that's the topic. And then we have a little Q&A, but let's see if we have enough time for that. Well, let's kick off with me introducing to you the panel. Very happy to introduce Barry Cosgrave. Barry is a partner within Mayer Brown. He's the head of the Islamic group within Mayer Brown. He's based in London and Dubai, but also very happy to share that Barry is often visiting in the US, and he will be in New York, I think the 13th and 14th of April. Might be helpful to know for all the New York-based managers. Furthermore, we have Lynda joining. She's my colleague from Ocorian. She's based in our Dubai office in the UAE. And very happy that Lynda has joined. And the reason therefore is she has been in the UAE for already 20 years, which is a long time. And she has a great view of, well, what has happened in the UAE for the past 20 years, but also being global head of sales for private clients and family offices. We think she has very unique insights on what she's seeing in the region when she is discussing a meeting with the family offices in the Middle East. And that's part of the focus group that we are going to talk about in this webinar. Okay, well, one of the questions is, why are we hosting this webinar? In our view, it's relatively simple because we see, one, more and more capital being available in the Middle East to be deployed. And two, we see more US fund managers looking to raise capital outside of the US. And that is obviously coming together. And then the question is, how can you structure those? How can you make structures that allow the investors to come into your fund? But obviously, there are several reasons why there's so much capital available. The oil and gas prices have never been this high. So there's a lot of influx of money in the Middle East that needs to be deployed. And they can't absorb that within their own economy. So hence the reason to look at, to be able to invest it globally in other jurisdictions. Then obviously we see that fund managers are having a more difficult time raising capital. And I think that's also one of the reasons why you see fund managers in general looking outside the US, and besides Europe, they are also looking into the Middle East to raise capital there. But accessing that capital is one of the challenges that they may have, and that is also something that we're going to discuss together with Lynda and Barry. And then I think those are the main things that we want to focus on, and then obviously the structural solutions. If we look at the Middle East, obviously you must have all heard of all the large sovereign wealth funds that are there. According to Preqin, the 8 largest sovereign wealth funds, those together already have 3 trillion in assets. But that's very much, everybody knows them, everybody knows who they are, and they're very sophisticated. What we want to focus more on is the group of family offices. According to Preqin, there are more than 260 family offices, and there's going to be a large capital transition to the next generation of more, according to Preqin, more than 2 trillion. And I think that's a very interesting group that we want to focus on. But who can tell me better than Lynda? Lynda, being based in Dubai, in the UAE, traveling through the region already for 20 years and meeting all these family offices. Could you share a little bit more what you see in the Middle East and how the market from and how the sophistication of family offices has evolved?
Yes, of course. So thank you, Mark, and thank you both actually for inviting me to join the webinar today. I'm delighted to bring some of my experience in the Middle East and bring a Middle East perspective to this, as you said, very interesting topic. As you mentioned, Mark, I've been in the Middle East now for 20 years, based in Dubai, and I travel regularly around the Gulf. So I meet lots and lots of these families that we're referring to. I've just spent 2 weeks on the road, including a week in Saudi, which is amazing, and there's so much happening there. There's a real sense of excitement. As you can imagine, I've seen huge changes, thankfully, most of which were great and are now proving to be solid foundations for greater things to come. So my main focus is working with families and single family offices. So setting them up, supporting those family offices and structuring their wealth and planning for the preservation of that wealth to support future generations. I think most of I also work with managers who want to set up funds, but in both cases, it's predominantly outward investments. So for us, as a firm, the GCC is a very important origination center for Ocorian, and using some of the 20 jurisdictions that we have, such as Jersey, Guernsey, Cayman, Lux, Dublin, and of course the UAE with DIFC and ADGM to support these families and managers. But if you look at you talk about opportunities in the Middle East, but if you look at the core of that, which is the family businesses, which is, they are the heartbeat of the region, the family businesses. Historically, family offices have followed a kind of a patriarchal structure with a single decision maker with, generational wealth being viewed as inherited by many of the beneficiaries. So kind of leading to a business as usual, operational and investment mindset. So, don't risk the business legacy or changing the core values. So you have the patriarch of the family saying, we've been extremely successful in construction and why do we now need to change that? But then you have the third and fourth generation family members coming along, and they're becoming increasingly more involved. They are Western educated mostly in the US, where they've lived and they've worked before, then returning back to take up very senior positions in the family businesses. Now, they are more likely to be open to diversification and to more non-traditional investment strategies. And then if you look at those strategies, they are more likely to change with an increasing focus on impact investing, and sustainability becoming more important, although not yet typically across the board. But when you're looking at these third and fourth generation family members, they are much more demanding in terms of financial reporting, transparency, service levels, governance, etc. And as a result of that, then the family offices have become much more sophisticated. Yeah. But moving forward, family businesses are a main focus in the ongoing transition to a more, resilient and sustainable economy across the Gulf. So, for example, here in the UAE, they've recently launched the Family Business and Private Wealth Center, very similar to in Saudi, but it's to support these family offices in formalizing their structures. And now, we've recent implementation of legislative policy, but it's to grow these family offices and this wealth, because the size and scale of this sector's contribution to the UAE GDP, which is similar to the wider region. So for the managers that are looking at these families, there's this real recognition from the government departments that's, that it clearly illustrates, the untapped potential of this sector that these fund managers want to look at. So I think, yes, there's been lots of changes in the region, there's greater sophistication, but potentially much more exciting, I shouldn't say much more exciting, but very exciting conversations for the managers that you're talking about today.
Yeah, okay, thanks for sharing it. And just one more question, and I think then it would be great to also have some of Barry, his views. Accessing these family offices. So for example, in the US, obviously you have a lot of large institutional investors, pension funds, endowments, and a lot of information is publicly available for them. So from a fundraising perspective, it's easier to access that capital, to simply put it. How would you say that is within the UAE, where I have the feeling that investors, they might be a little bit more focused on privacy and all that stuff? From a fundraising perspective, what do you see there with the family offices? And then hopefully Barry can also chime in a bit on what he sees.
Okay, so if we're talking about, managers looking for opportunities in the region and what is here in terms of the wealth, obviously we've got the sovereign wealth funds, and we've got the some of the largest sovereign wealth funds in the world here. So there's lots of outflows from this part of the world in that, from that sector. But I think for the managers, what you rightly say is that, for them, it's more attractive, but not necessarily more accessible. Target market has to be the families and the single family offices in the Gulf. They are hard to penetrate. I mean, you have family offices like Sedco and Sidra and Masic, and these are all very well-known large family offices that are very sophisticated. But there are many others. There are hundreds of family offices in the region that, there'll be ABC Capital, or they'll have names, generic names that you don't know they're even family, that they're family offices. So it's a challenge, but I think, they have extensive wealth that's generated, as you said, from oil prices, from successful businesses in construction, healthcare. As you said, there's an estimated $3 trillion of private capital, with $2 trillion of that to pass to the next generation in the next decade. So there are lots of reasons for, managers to think about how they should be targeting that wealth. But if you look at, I mean, I don't know if you want me to just mention it now, Mark, or wait for later in terms of trends that I've seen. Do you want me to?
Please share. Sure.
Okay, just from speaking to families, I know that, family offices in the GCC are now some of the biggest LP allocators to GPs in the US. But one of the trends that has become noticeable of late is that larger family offices are increasingly backing smaller managers, and also that most families, as we know, they still invest through funds, but are also keen on co-investment opportunities and direct deals as well. And especially given the increasing role of next gen family members in areas like VC. So if you look at, even just looking at venture capital, when we talk about the more sophisticated family offices and specific to venture capital, just having that capital is no longer enough. So sometimes, the fund allocations and leading GPs are capacity constrained. So having, just being able to have that 25 million or that 50 million is not enough anymore to be granted that allocation. So you're seeing family members leaving the region, like visiting places like Silicon Valley, spending time there to prove their worth as strategic investors, but also helping those GPs broaden the networks and source deal flow. So I think, the opportunities are here, but like you say, it's very challenging to penetrate those families. So Barry, I don't know if what you want to add to that.
Yeah, I mean, I would echo everything you said, Lynda. I mean, we've certainly seen, from a deal flow perspective, I would say there's been an enormous uptick in the past 5 years, which continues to accelerate. Traditionally we would see sort of ad hoc deals maybe once or twice a year, be it a single asset class or be it a fund investment. And we're now seeing much more increased flow. And a lot of that is driven by, as you say, Lynda, this growing sophistication within the family office network, and a view to, it's no secret that all the Middle East economies are seeking to transition away from being purely oil-based. And one of the ways that that's being put into practice is we're seeing a lot more family offices as they grow in sophistication, as they look to secure that wealth for the future. How do they provide for generations to come? And what they've been seeking for many years is access to more diversified assets and candidly more sophisticated and professional fund managers and investment managers. I guess the sort of elephant in the room has always been, well, how do I access capital in the Middle East when there's a requirement from a religious point of view for a Sharia-compliant structure? The traditional way that this is being viewed is that you would always have to have a fully Sharia-compliant fund. That is still possible, and we are working on transactions for fully Sharia-compliant funds. But just to take a step back for a second, why do they need that, or what is the reason for that? And the reality is that clearly there are the vast majority, if not almost exclusively, population of the Middle East is Muslim. And where you have individuals, there's obviously people have stronger faith. Some people have stronger faith than others, but there's certainly always been a preference, particularly amongst family offices and also pension funds, where the ultimate beneficiaries are individuals, to have a structure or to have cash flows that are Sharia compliant. That has traditionally been a bit of an off-put for US investment managers, simply because there is a lot of work that needs to go into putting together a fully Sharia compliant fund. What a product that we've been developing over the last 12, 15 years is a product that we call it, it's a Sharia compliant feeder structure. I won't sort of go into the technicalities at the moment, but the big advantage for a US investment manager is that there is no need to do anything to your conventional fund documentation. So all that conventional fund documentation that you've worked on for many years, that you present to your conventional LPs, can be presented to the Sharia compliant investors. And then we can bolt on a structure that allows that income to be cleansed and to be turned into Sharia compliant income for those investors. Now, there are limitations around that. There are certain asset classes into which Sharia compliant investors can't invest. But what's been a noticeable trend over the past 2 years with the growth of ESG and ESG requirements within funds, we've had a lot of fund managers comment to us that actually the ESG requirements are more stringent than the Sharia compliant requirements, and therefore the Sharia issue kind of falls away. And loosely speaking, Sharia compliant investment guidelines or the prohibitions deal with things like you can't invest in arms manufacture, tobacco, alcohol, adult entertainment, those sorts of things. And those asset classes tend to be prohibited anyway for most fund managers. Yeah. And so what we're seeing is a large growth, and it is targeted at the family office market, at the pension fund market. And that structure that we can put together is there is obviously a cost involved, but it is relatively inexpensive. It's now become a very well accepted structure within the Islamic finance market. So multiple scholars have signed off on those structures, which makes their implementation pretty seamless. Sorry, say again, Mark?
Yeah, could you just add a little bit of flavor to the feeder structure that you're talking about? So you have an existing US fund or a Cayman fund structure, and then you can allow investors who want to comply with the Sharia principles to come into that fund, into the existing fund as well, through this feeder structure. I also rolled the scholar.
Yeah, so the feeder structure at its most basic, we interpose two SPVs between the fund itself and the ultimate Sharia investor. So the limited partner in your fund becomes an SPV that's set up in an offshore jurisdiction, and they enter into what's called a murabaha arrangement, the two SPVs, and then the ultimate investor invests into the second SPV, as it were. And I can provide more detail on that structure if people would like to follow up. Then the question is, what is the role of the scholar? So Islamic finance, in a nutshell, it's not a codified body of law. It's an interpretation by a scholar or a group of scholars as to what is compliant or not. And we typically use that would be an outsourced function to a Sharia scholar who will provide you with a fatwa, which is a little bit like a cross between a legal opinion and a rating letter, but essentially says that the structure from their point of view is Sharia compliant. Now, there is obviously, there are variations in the views as to Sharia compliance, and different scholars have different views, but there has been a convergence happily and much to the benefit of the market around this feeder structure, which provides a lot of comfort to managers in the US. And we've done multiple of these structures for multiple different managers and multiple different asset classes. Traditionally, real estate, for obvious reasons, was the most popular asset class, but we've seen a lot of growth in infrastructure funds and also private equity funds now. There are certain funds that it's more challenging for example, a hedge fund or a credit fund is going to struggle to use this Sharia compliant structure, simply because if you have an underlying interest bearing or speculative investment, that's something that's prohibited by Sharia. But that being said, there are other options if the fund manager can be flexible in terms of the structure it uses for its financing transactions. We can also make that fit for a Sharia compliant investor.
But that's very exciting to hear, because indeed real estate, that used to be the asset class they invested in the most, and I think it's still a large allocation of capital goes into real estate. They're very familiar with that. But you're saying that also you're seeing opportunities for them to get involved with credit funds, or is it
credit funds are a bit more of a challenge. I mean, private equity has been the one that's really grown a lot, and it's become increasingly popular. And as Lynda mentioned earlier, also venture capital. And we've seen structures that are structured as a co-investment, or we've also seen structures where we bring in a Sharia compliant investor to a commingled fund. So the Sharia compliant investor is sitting next to and alongside all of your conventional investors. And the way that the structure is put together is all of the rights and economic benefits that a conventional LP would have are passed through to the Sharia compliant investor as well. There's a little bit more structuring involved, and there is obviously a bit more administration involved. But Mark, maybe you'd like to have say a few words on that, because there is an administrative function, and sometimes the managers in the US say to us, well, is this going to increase my back office burden and increase the amount of work that we have to do, because we're not a Sharia compliant institution and we're not well versed on those structures and those administrative steps? No,
okay, thanks. Yeah, definitely happy to share a little bit, again, high level about the operating it. But I think, just to summarize, the takeaway, I think, from what you have been saying and Lynda has been saying, is there's a lot of capital available. The investors want to invest in fund managers, especially with US fund managers. And there are structural solutions, feeder structures that are relatively simple to set up from a legal perspective, that will then allow the investor who wants to comply with Sharia principles to get into that fund. And it can be a new fund, an existing fund, and the fund itself does not have to be a Sharia fund. It can just be a traditional PE fund with a Cayman structure or elsewhere, but you can structure the feeder into that fund.
Absolutely, yeah, and it makes access to capital far more easy, and it's a much smoother process for all involved.
Yeah, okay. And then one more question: if you think about, so if a fund manager goes into the Middle East and they are aware of this feeder structure being available, I guess it will help them with fundraising and making sure that they can show to the investor, we know how this works. When they would set up a structure like that, and the operations, that's something that they obviously can outsource, and that is something I think that is good for fund managers to know. That's a role where a firm like ourselves, Ocorian, can come in. So just a little bit about Ocorian. So we are a large fund service provider. We have more than 1,500 people globally across 20 jurisdictions. But what is relevant for you to know is that we have a team of 35 employees that are focused solely on Islamic finance, investment structures, and or feeder structures. And I think what is good for you to know is that setting up the structure, that will be done together with legal counsel, including someone like Barry. But then once you set up that feeder structure, you can outsource all the work that needs to be done. And that is something that we would then take into hand. So that means simply providing the registered address, providing local resident directors. But also more important, I think, what most fund managers want to know is, okay, what happens when I issue a capital call from my main fund? What's good for you to know is that managing the process from capital call to getting all the funds from the investors into your bank account, that's a process that we will take care of. So we will take care of the structure that is designed by Barry or anyone else who's involved. And then once the structure is set up, we will do the ongoing maintenance and management of that structure. So you only have to worry about sending the capital call notes in time to us, and then we will do the whole process including doing the commodity trades that are something that is part of the process most of the time. So I think it's important that you know that you can outsource that. On top of that, all the fees and the cost for this structure will not be borne by the fund manager. Typically, if it vary, you'll see that the investor for who this is set up, or the group of investors, because it can also be commingled, it's borne by the investors, right?
Yeah, that's right. And I think it's important as well to remember that traditionally family offices and investors in the Middle East haven't had access to the skill set of fund managers in the US. And that's something that's changing. And one of the questions is always, well, is it worth that extra cost for them? And the short answer is yes, it is. Because suddenly what they're getting now is access to asset classes in North America and Europe and elsewhere that previously they haven't had that access to. They're getting access to expertise. And as a result, they're getting solid returns that are backed by proper investment teams with the right levels of expertise. And so it's an investment that's very much worth making for them.
Yeah, so I think from an investor perspective, it's great because they get access to the great US fund managers. And from a US fund manager perspective, it's great to know the capital is there, the structural solutions are there, and the service providers that you need to help with the whole process are there as well. So in essence, because I think sometimes the unknown is what scares some managers, but I think what they need to know is that it's not that it's relatively straightforward to go in there, raise the capital and structure it in your fund. It's nothing more complex or difficult than, for example, setting up an AIFMD compliant structure in Luxembourg with all the regulatory requirements that you have there. Because I think in the UAE it's more simple than in Europe, for example.
It is.
Sorry.
Please, Karen.
I was just going to say from a practical perspective as well, look, when managers are talking about, yes, they're coming to raise funds here, but also there's the question about whether they should be looking to set up here. And I think, if you're using DIFC as an example, Dubai International Financial Centre, they are really promoting this ease of process that, they're calling this plug and play facilities. So industry heavyweights like LMR Partners, a $9.8 billion hedge fund, has obtained their license in DIFC. And on the back of that, DIFC have announced that they're in discussions with more than 50 hedge funds who jointly manage over $1 trillion of assets. So there's that kind of angle to it as well, that looking to set up here, because I see that one of the questions is about how do we obtain a license to then access, as a hub or a platform to then access these families around the region. But that was one thing. And the other thing I wanted to say is that something that managers do also have to think about is if they're coming into the region, there are also challenges. So one of them you just touched on was the Sharia compliance, which is a major concern even for younger generations. And surveys are showing now that as wealth increases, so does the importance of Sharia compliance and structuring. So it's important for managers to appreciate these cultural differences and be mindful of it, particularly when they're approaching families and single family offices. But the other thing I wanted to say is that there are fantastic investment opportunities in the Middle East at the moment, particularly in Saudi. So managers that are coming in need something compelling. They want something, there is this move towards diversity, but they also need some, it has to be compelling to attract the families to diversify away from the local and the regional investments.
Okay, well, that's very helpful to know. Thanks for that, Lynda. I just see that we have just run over time of 1 minute. Well, we'll just wrap it up then. Barry, is there any final words that you would like to share before we wrap up this webinar that passed by really fast, by the way?
Yeah, as always. I guess the sort of key takeaway, or the key takeaway that I'd like people to leave with is that setting up or accessing capital from Sharia compliant investors is not as complex a process as people fear it is. We have a very well trodden path. We can either do a fully compliant fund or we can do this feeder structure, which is a simpler and quicker process. Yeah. It's very well accepted in the market. It's liked by a number of investors. And to Lynda's point, the increasing desire to have something that is Sharia compliant, now that it is very, very possible to do so, but it's straightforward. We're able to achieve it with speed of execution. And then the actual administration of that structure post capital call or pre and post capital call is very straightforward and can be entirely outsourced, making the fund manager's life pretty straightforward and easy.
Yeah, thanks for those last words. Some last words from me. Yes, we are definitely seeing that as well, and indeed some very large fund managers setting up these structures now. So we are very excited about being part of that and assisting them with the whole back office support. Wrapping up this webinar, everybody, thank you very much for joining this webinar. Time flew by. We could stay on for another 30 minutes. What we would like to recommend is anyone who has questions, feel free to reach out to Barry, Lynda, or myself. I'm based in New York, as you can see here. And obviously, Barry and I are very happy together with Lynda to set up video meetings, to have an introduction call in which we can discuss your personal situation a little bit better, and we can provide you a little bit more individual suggestions and advice that hopefully will help you with one, accessing capital, and to successfully raise the capital from investors in the Middle East. Thank you, everyone. Thank you, Lynda.
Mark, sorry, Mark, it's
Go
also,
ahead.
there are some questions in the Q&A, so we'll address those as well.
We will address those. I see them now. Thank you for sharing the questions. We will address them individually because indeed we just ran over time already, 3 minutes. But no worries, we'll address those individually as well. Thanks for reminding me. Bye, Lynda.
Thanks, everyone.
Thanks so much.
Bye.
Have a good day.
Bye. You too. Bye.